not in the free markets. You know the whole drill. Well, stocks are getting drilled a little bit, but not a lot, and it has very little to do with these developments. We'll explore that in more detail. But Aaron Gibbs joins us from Gibbs Wealth Management. We've got Alan Nuckman here, Bullseye Option Chief Market Strategist. Alan, so far markets kind of ignoring this hard line the administration will take to China, maybe extending that into Iran and other things. What do you make of it?
Well, there's two parts to this. I'm a commodities guy by nature, and steel and aluminum have been bottoming out, and they finally got a little bit of support, and this may push the price a little bit higher, but they're about half of what they were just a couple of years ago. So there's still a lot more upside, and what impact that has on inflation, we will see. But we're getting a 5% pullback in the market that everybody's been wanting and asking and begging for, but you're not seeing people step up just yet. But what I'm seeing today is interesting. New swing lows, but not new highs in volatility. That's usually a bullish sign. And let's remember the VIX, that fear factor, is hanging around at 18. And last year at this time, we were way, way up at 30. So even though, the markets feel a little spooked, they're not compared to last year.
All right, you're talking about a very popular fear index, and if it's at around these levels, especially where it had been much higher, people are fairly sanguine about things. That could also be a counter indicator that maybe they're too sanguine. But Aaron, let me get your take on what's happening here. I mean, he's quite right to point out the markets maybe have been wanting, some have been wanting to see a 5% correction. If the Dow were to fall a little over 109 points today, it would be underwater for the year. That might be a worrisome development to some, fearing the market's petering out. I'm sure a lot more based what the Fed is doing or delaying on cuts, but what do you think?
Yeah, I agree that these commodities actually have been some of the fewer commodities that have actually been, prices have been going down. It's actually been a good thing. I think certainly if there are tariffs, certainly that can lead to inflation, but that takes a little while for that to play out. I think the bigger concern and where the real fear is coming from is Fed rates cuts and persistent inflation, which this could potentially add to. So I don't think investors are necessarily going to react immediately to this. I think it's going to be more, if we see a bigger decline in the markets, it's going to be a bigger catalyst, whether it's about Israel or other conflicts around the world, rather than trade tariffs.
So let me ask you a follow-up on that, Alan. This notion that people have been waiting for interest rate cuts are going to have to wait a lot longer, maybe not even see it happening this year. Where are you on this? Does it matter this year?
For me, it doesn't matter. I'm a price guy, but as conversation, it does matter. And what's important to note here is we are here for longer. We're not higher for longer. We're here for longer. There's a big difference. Rates aren't going higher. It's just delaying when they're actually going to see some cuts. And for whatever reason, everybody is focused on the 2% inflation that we are accustomed to. There's no law. There's no rule. And that was when GDP was lower. But now that we've got GDP at 3%, maybe 3% inflation is the new 3%.
That's interesting. Aaron, he's quite right to say we're here for longer. We might not be higher on top of that, but market rates are higher, the ones that the Fed can't directly control. They can jawbone one way or the other, and some of their more concerned comments about delaying rate cuts and the like have prompted market rates to back up. I don't know if that's corrected, a slight correction today, but not much. What do you make of that and where market rates are going?
Certainly. So I think, those probably will be going higher. The fact that people are really wrapping their heads around the fact that we may not see any cuts at all in 2024, potentially not any in 2025 if we see a second wave of inflation, which there are signs that is happening. And so that really reassesses, the value of equities compared to fixed income and how you reallocate between the two. And so that could mean that we could even see bigger declines in the equity markets because there's just no reason to have the type of premiums that we see in the equity markets. So I think, again, it's really about resetting our expectations and these types of market rates and what the Fed is doing is really going to ultimately set the stage for the next 6 months.
A lot of times, guys, we need to look no further than ourselves, right, and what we're buying or how we're thinking or what we're doing when we're shopping. And Alan, to that regard, I always tip my hat to my wife, who single-handedly is carrying the United States economy. And I only say that to echo a wider view here, that the consumer is very strong. I mean, even when you look at United Airlines and its forecast, it was very robust, I believe, right through the end of the year. In other words, that flight bookings are such, and we're seeing this out of the Carnival Cruise Lines and the others that show
Right.
a built-up, demand that is still out there. So explain the consumer, explain how he or she factors into your thinking.
Well, that's the million-dollar question. Can the consumer continue to spend, and are they going to have the means to do so? What's important to me, like I said, is price. And I'm focusing on price. We're 5% off the all-time forever highs, which what's happening in the world right now is amazing. The markets were positive on Sunday night after the action. So, the resiliency is definitely there for the markets and for the consumer. And what's important for me is we're 45% above those October of 22 extreme lows. So the markets have had an extreme run. Profit taking can happen at any time, and people are looking for an excuse, and we're off a little bit. Will people step up and buy? That's the million-dollar question. Buy the dip has been the mantra for the last almost 2 years.
Aaron, a lot of people are very concerned about buying a home or refinancing the one they're in with this backup in rates. That's another part of the economy that's crucial that could be sort of, stalled for the time being. What do you make of that?
Yeah, we're seeing some weakness in housing starts. We're seeing certainly a slowdown in just sales for many, many months because of higher mortgage rates and people being stuck in their existing homes because they can't afford to purchase another one. I think that within the housing area, that certainly could be a slowdown, but given the strength of the economy, and let's remember the economy and equity markets are two different things. They're not always perfectly correlated. We can have a very strong economy with strong consumers and also pushing that inflation back up higher and still be able to push through higher GDP, even if we do see a slowdown in the housing area.
All right, guys, don't wander too far. I want to pick your fine brains on what's going on with Tesla, the appetite for EVs and all of that, and is this the right time for Elon Musk to be pushing that $56 billion pay package? Let me know how that goes, but that's just coming up. I want to go to Senator John Gordon of Texas right now. Quickly, we go back to this. When issues come up about safety, it could be for an airline, it could be for an auto company. There's a poll over that company for quite some time before we get a sense of where things are going. Right now, Boeing can't get out of its own way, and we don't have many aerospace giants in the world right now. We're down to two, principally, Boeing and Airbus. So I wonder, Alan, to you first on what you make of this and the impact of this.
Well, it wasn't so long ago that Boeing was the biggest Dow star, and it's changed, obviously, in price and psychology. It's dropped from 270 down to 170. We've got earnings that come out next week. I think the negativity sometimes gets overloaded, but I would like to see it form a little bit of a bottom base, but it's still a sound company. Like you said, they've got their market. And I'm pretty confident, I'm a frequent flyer, pretty confident in the airline mechanics that inspect each and every jet. So I think this is something that people are afraid about. They're also afraid about shark bites in the ocean. So
you're right.
I just live my life.
All right. You didn't strike me as a commercial airline traveler, but I learn something new every day. So the Gulfstream is being parked on the site. I joke. But
yes.
Aaron, let me get your take on this because we were just speaking the last time I had you fine folks here about the demand for travel. United Airlines booked solid. It looks like it's going to be that way through the end of the year. And I don't want to make a cynical leap here, whether this is the kind of stuff at which people say, you know what, I'm a little leery. I'm going to check out whether my plane is a Boeing plane or any one of these ones that this guy is talking about. And I don't know. Could it be that disruptive?
Look, I don't think it's going to stop people from flying. Also, even if you choose an airline where they say that particular flight doesn't use, XYZ Boeing plane, they can still change the planes at the last minute.
That's right.
So, there's no guarantee they don't have to fly the plane that's initially on your itinerary. So I think people are going to simply accept that low risk if they want to travel. I don't see that people are suddenly going to start driving or not travel. We do see the earnings estimates still very strong for the airlines, and though many of the U.S. airline stocks have taken a bit of a hit that has largely to do with higher energy prices rather than revisions in our earnings estimates from declined seats. We're really not seeing any big consumer pullback away from airline travel.
All right, switching gears a little bit, guys, and Alan, I'll throw this to you. We are seeing a decline in interest in anything Tesla. Right now, it's under $500 billion valuation. Hasn't seen that in quite some time. And as the stock continues to swoon, apparently buyers are continuing to bolt. Now, this at a time when the cars have never been cheaper, Tesla vehicles.
Right.
So far, they're not being enticed. But where do you see this whole thing going? Is it a bigger EV statement or what?
We'll know very soon because we've got earnings coming out here next week, and the markets are expecting about a 10% measured move. We've had a pullback, and we're getting very close to testing the one-year low at 152. So when we either test or reject it, we'll have an indication in price. But I've learned not to disagree. I can disagree with Elon Musk, but I can't doubt him. He was the richest man in the world for a reason. So, he has the ability to figure this all out. But again, it's buy low, sell high. I had a friendly bet here, a wager, that I thought that Tesla would see 250 before it saw 150 when we were trading around 200. That hasn't come into play yet, but we're getting very close anyways.
Real quickly, Aaron, my producer, is going to come in. I did want to get your thought on this. That, obviously, Elon Musk is back to pushing that $56 billion pay package. Now, it's over many years. I get it, and all. And that, their argument is his interests align exactly. His interests align with shareholders. That might be so, but shareholders' interests are not being aligned to their happiness. But what do you make of that whole thing, and whether this is the time to push something like that, Aaron?
Well, we know that really Elon Musk and his personality, his fan base are the ones that are pushing up the stock price. We've argued for many years that there's no reason that Tesla should have the valuations that it does based off of its sales and its revenue. And certainly it has a consistent reputation for not meeting estimates and only has recently been able to beat its production values. So I think, look, if they want to argue about the pay package, the man clearly has an extraordinary presence in the company and its valuation. And if it does align it, even if it seems exceptionally large, I think he'll probably end up getting what he wants.
All right. Well, what's
incentive-based? It's incentive-based.
Yeah.
It is incentive-based. You're right. It better be incentive-based because it's a lot of money. That's even more than you're making right now, Alan. Always
Exactly.
good to see you guys. Alan, Aaron, thank you very much.
You.
Talk about incentives and whether he can raise more money. Donald Trump is certainly working overtime, even with the